Hello again, everyone. This is Joe, and we're going to do an update here on Under Armour. Today is November 9th, and it is about the middle of the day, close to noon Central Time. And we're going to take a look at this. This is the weekly chart that I've got, and yes, this does update for the existing week that we're in. But just a quick update, just to refresh if you don't remember and haven't watched all my videos. Back on June 1st of 2016, which was right around in here when the stock was in the around 36 or so, I had put this chart out and I had said that I thought that my initial target, I thought Under Armour was in for a very rapid decline, and that the initial target on that was 11.5, and I thought that ultimately it could correct down into this area down here, which is this dotted line is at about 7. Now, the reason I did that is based on Elliott wave analysis. I felt like Under Armour had completed 5 major waves to the upside here from the 2009 low to the 2015 high. The 5th wave was a very extended wave, okay? So, you know, we had this move in here, 1, 2, 3, 4, and then this very extended 5th wave. And as a result of having that extended 5th wave, I was looking for a fairly quick pullback to the low back down here to wave 2 of the 5th wave. Now, it didn't happen as fast as I thought it would, but the update is that as of right now, it hit this week. The actual low this week was $11.40. We hit the initial target of $11.50. So where does that put us, and what does that mean? Does that mean this is the end of the correction? Let's take a look at the daily chart. Okay, when we look at the daily chart, here's the A, B that I was talking about, and here's the C wave. Okay, so this is a very large zigzag. And the C wave can take a couple of different shapes, but in this case, it took an impulsive wave, 5-wave move to the downside. So what I've done is I've got a channel here where I've got the trend line between wave 2 and wave 4 projecting from wave 3. And it turns out that a potential wave 5 end is down here at the bottom of the channel. Okay, so it's a very real possibility that we could be seeing the end of that wave 5 down in here. Now, the 5-wave sequence in here isn't totally clear to me. I could see how we could possibly have, 1, a sharp 2, a 3, and kind of a sideways push 4, and then this 5th wave, kind of a capitulation, big gap right in here, capitulation 5th wave, and we end at the bottom of the channel. Now, here's the key. Now, this is the trading that's going on today. It's at $11, well, as of right now, $11.90. And so, we really need to see this start to turn around before you can say, okay, really, this has ended. Now, we did get a potential on that day where we had that low, $11.40. That's a potential reversal candle that got put in here. So that low needs to hold. And a couple of things about it. So now we've got this at the lower end of the channel, okay? And the other thing that I saw is when I projected, and let me do this, which I'm trying to think what might be, let me do it on the weekly because I think that'll show it a little bit better, is the length of wave C. Here's A. Go back to beginning B. So right now we're getting 161.8%, a Fibonacci projected length of, so this, what this means is you measure wave A and wave C would equal A right here at 100%, and it's 161.8%, which is a Fibonacci projection right down here just slightly above 12. So you get that projection right in there, you get the minimum target hit, you get the bottom of the channel hit. So there's several things that are happening. There's a confluence of things that are happening that may indicate that we might be very close to at least an intermediate bottom. So if that's the case and we've completed a zigzag, what does that mean? Does that mean that we're into a new bull market? No. We could still morph into some other further kind of corrective pattern these things can become very complex. And the key is going to be, what kind of wave structure do we see in the rally? You know, assuming we get a rally in here, what kind of wave structure do we get? Now, you're going to run into resistance right up here in the 16 to 17 area. You're going to run into resistance up here. Let me put my crosshairs on. You're going to run into resistance up here in the 19 to 21 area, I believe. Let's call it 20, just because of where all that trading occurred. The people that didn't get out when the stock gets back there are going to want to get out. You know, if they got in thinking they're going to buy around 20 and now it's down here at 11, so the same thing's going to happen right in here. So I guess the net out on this video is that there's a confluence of indications that may lead to this being at least an intermediate bottom, and we need to watch to see if the price action confirms that, which means you need to rally and get back up in here and start to see a series of higher highs and higher lows, and at least start to see some trend lines break. And, you know, we're a ways away from that, but right now, that's the current picture on Under Armour, and we'll check in on this a few months from now, and, you know, we'll monitor it on a weekly basis, but then check back in a few months and see how this thing is doing. All right, that's it for today. If you felt like the video was helpful, please hit the like button, and also go on over to the website, check out the other things I've got for you over there, some blog posts, and check out the Stock Squawks page, and check out the Insider membership while you're at it. All right, everyone, have a great rest of the day.